Germany stands as one of the most financially stable and economically powerful countries in the world, with an impressive per capita income of nearly $55,000 USD a year. Yet, very few people truly understand how the average German manages this income, protects it, and uses structured financial tools like life insurance to secure long-term stability. Imagine a country where saving is part of daily life, where people treat financial planning as seriously as their careers, and where insurance isn't just an optional add-on but a core pillar of family protection and wealth preservation. That is the world we are about to enter. In this video we dig deep into how Germans think about money, why life insurance is so deeply integrated into their personal finance culture, and how their disciplined financial habits contribute to one of the strongest economies on the planet. The hook lies in understanding a simple truth. When a nation earns well, and the average German earning between $3,300 and $3,800 per month certainly does, how they protect that income becomes just as important as how they earn it. Germany's financial culture is shaped by stability, responsibility, and long-term planning. People don't simply depend on the government or rely on hope. Instead, they actively build layers of protection to safeguard the income they work hard for. Life insurance is one of the most essential layers. Whether it's a young family insuring a $300,000 USD mortgage, a working professional protecting future earnings, or someone planning for retirement, insurance is seen as a fundamental tool, not a luxury. In fact, more than half of German households maintain some form of life insurance, reflecting a mindset where financial security is not postponed for later, it begins today. And in a country where costs of living, long-term care, and education continue to rise, families understand that losing an income without protection can instantly undo years of planning. In this video we explore the full picture: how Germany's strong income levels influence financial behavior, how disciplined saving habits help households maintain stability, how insurance products fit into daily life, and how Germans turn consistent, structured financial decisions into lifelong security. You'll see how average income translates into real decisions, what portion goes to savings, how much is spent on premiums, and why insurance often costs less than 1% of annual earnings despite offering life-changing protection. By the end of this journey you won't just understand life insurance in Germany, you will understand why the German approach to personal finance is respected around the world, and what lessons every individual, no matter where they live, can learn from it. Germany stands at the heart of Europe as an economic powerhouse, driven by engineering excellence, manufacturing supremacy, and a disciplined workforce that is admired globally. With a GDP per capita of nearly $55,000 USD, the German economy consistently ranks among the top in the world, reflecting both high productivity and strong national output. This remarkable economic strength is not accidental. It is built on decades of industrial innovation, export leadership, and a strong culture of efficiency that starts at the workplace and extends deep into society. German industries, particularly automotive giants like BMW, Mercedes, Volkswagen, and Audi, along with engineering and pharmaceutical sectors, form the backbone of the nation's economic identity. What makes this economy especially resilient is how evenly opportunities are distributed. The average German worker earns between $45,000 and $60,000 USD per year, creating a comfortable middle class that fuels consumption and stability. Germany's unemployment rates have historically remained low, and strict labor protections ensure that workers not only earn fairly but also enjoy strong job security. This stability creates a solid financial environment where individuals feel confident planning long-term goals such as buying homes, investing, and securing insurance coverage. When comparing Germany with other European countries, the numbers speak for themselves. France averages around $45,000 USD per capita, while the United Kingdom sits near $50,000 USD. Germany maintains a lead through strong exports, high-value manufacturing, and a balanced welfare system that prevents economic shocks from affecting families as severely as in other nations. This combination of high income, stable employment, and efficient financial systems creates a unique foundation for personal finance decisions, including the high adoption of life insurance. In a nation where financial power is matched with financial responsibility, Germans don't just earn well, they plan well, ensuring their income remains protected through smart financial tools. Germany's personal finance culture is built on discipline, long-term planning, and a deep-rooted respect for financial security. While many countries operate with a spend first, think later mentality, Germans are known for doing the opposite. With average monthly net earnings between $3,300 and $3,800 USD, most households prioritize careful budgeting, consistent saving, and protection-based financial products. This mindset is not just a habit, it is a cultural value passed through generations, shaped by history, economic cycles, and a national preference for stability over risk. One of the most defining features of German financial behavior is the high savings rate. Germans typically save 10% to 17% of their income, even during periods of economic uncertainty. This disciplined approach is supported by widespread use of structured savings accounts, government-backed pension plans, and insurance products that add layers of security. It is common for Germans to maintain emergency funds covering several months' expenses, ensuring that unexpected events do not destabilize their financial foundation. The German population prefers low-risk financial decisions. Instead of aggressive stock market investments or speculative ventures, they put their trust in steady and reliable financial products. Savings accounts, bonds, pension schemes, and insurance coverage represent the core of household financial planning. This cautious approach might seem conservative, but it has proven effective in creating long-lasting financial health. Another key element of German finance is transparency. Banks, insurance companies, and financial institutions operate within strict regulatory frameworks, reinforcing public trust. This trust encourages people to engage with financial products confidently. Germans aren't just investing for themselves, they are building security for their families and future generations. This attitude explains why financial protection tools like life insurance play such a central role. For Germans, money is not just for spending, it is for securing a stable future. Life insurance holds a significant place in the German financial structure, functioning as both a protection tool and a long-term financial planning instrument. With a strong regulatory foundation, high public trust, and affordable premiums, Germany's life insurance market ranks among the most mature in Europe. More than half of German households own at least one life insurance policy. And this widespread adoption is directly linked to the population's desire for long-term stability and financial responsibility. Germany offers two primary forms of life insurance. The first is term life insurance Risikolebensversicherung, which provides pure protection for families by offering a death benefit without savings or investment components. This type of coverage is especially popular among young families, homeowners, and working professionals, often used to safeguard mortgages and future income. Coverage amounts commonly range from $150,000 to $500,000 USD, depending on the family's needs, lifestyle, and financial goals. The second type is whole life or endowment insurance, Kapitalbandversicherung, which blends protection with long-term savings. These policies accumulate value over time, functioning like conservative investment products. Many Germans use them as part of retirement planning because they offer guaranteed returns, stability, and potential tax benefits. These policies often mature at values between $80,000 and $150,000 USD, depending on duration and contributions. Germany's insurance industry is heavily regulated, ensuring transparency and customer protection. Companies must demonstrate financial stability, ensuring claims are paid promptly, and that long-term policies remain secure. This strong oversight creates trust, encouraging more households to rely on insurance for financial protection and wealth building. The accessibility of life insurance is another important factor, with term life premiums averaging only $15 to $40 USD per month. Most families can afford coverage that safeguards their financial future. In a society built on planning and protecting what you earn, life insurance becomes more than a policy, it becomes a cornerstone of responsible financial living. Family stability is one of the strongest motivations behind Germany's widespread use of life insurance. With structured financial planning deeply embedded into household culture, Germans view insurance not merely as paperwork, but as a responsibility to the people they love. When a family depends on a stable income, often between $45,000 and $60,000 USD annually, protecting that income becomes essential. A financial disruption caused by the loss of a breadwinner could threaten everything: a home, a child's education, long-term plans, and the sense of security families work so hard to maintain. This is why life insurance is closely tied to major financial obligations. For example, The average German mortgage ranges from $250,000 to $350,000 USD, making it critical to ensure that the remaining family members are not burdened with payments they cannot sustain. Life insurance policies are frequently structured to match mortgage amounts or provide income replacement for 5 to 10 years, equating to $250,000 to $600,000 USD in coverage for many households. Parents especially rely on insurance to ensure their children's future remains protected, even if life takes unexpected turns. Education costs, healthcare, childcare, and daily living expenses can quickly accumulate, so families see insurance as a shield that maintains stability during the most challenging times. Beyond financial protection, life insurance also provides emotional relief. Knowing that loved ones will have financial support reduces stress and allows families to focus on healing and rebuilding if something tragic occurs. The concept of responsibility is deeply connected to German values. Providing for your family includes planning for scenarios you hope never happen. This cultural mindset explains why life insurance is not seen as optional. It is an essential part of any responsible financial plan. In Germany, protecting your family means protecting their financial foundation, ensuring security and dignity no matter what happens. While life insurance in Germany primarily serves as a protection tool, it also plays a significant role in wealth-building strategies for many households. Germans value financial stability over high-risk investments, and this preference drives them toward savings-linked insurance products that combine security, guaranteed returns, and long-term planning. These endowment and whole-life policies offer both a safety net and a conservative investment opportunity, making them appealing to families who want predictable growth without market volatility. These policies gradually accumulate cash value over time. Depending on the structure, contributions can range from $80 to $200 USD per month, building a reliable maturity amount that often reaches $80,000 to $150,000 USD over 15 to 25 years. While these returns may appear modest compared to stock market gains, their strength lies in consistency and tax advantages. Many German policies offer partially tax-free payouts upon maturity, making them highly attractive as long-term savings vehicles. Moreover, these insurance products allow individuals to remain financially disciplined. Monthly contributions enforce structured saving habits, ensuring that people continue to put money aside even during uncertain times. Unlike high-risk investments, the guaranteed nature of these policies offers peace of mind, especially for families who prioritize security. One of the key contrasts between Germany and the United States is the approach to life insurance as a wealth-building tool. In the US, certain insurance plans are marketed heavily as investment vehicles, with diverse features and higher risk tolerance. Germany, however, prefers simplicity and safety. Policies may grow slowly, but they grow reliably, reinforcing long-term financial health. These wealth-building policies also integrate seamlessly into retirement planning. Combined with state pensions and employer-sponsored plans, insurance-backed savings create an additional layer of financial protection in old age. By blending security with disciplined growth, Germans use life insurance not just to protect life, but to enhance it. One of the most appealing aspects of life insurance in Germany is its affordability, compared to the country's average income levels. With annual earnings often falling between $45,000 and $60,000 USD, most households can comfortably allocate a small portion of their budget to insurance without compromising daily living. In fact, for many families, life insurance costs represent less than 1% of annual income, making it one of the most cost-effective financial protection tools available. Term life insurance, the most popular and affordable option, typically ranges from $15 to $40 USD per month, depending on the policyholder's age, health, and coverage amount. For coverage extending beyond $300,000 USD, premiums may rise to $40 to $70 United States dollars per month, but even at these levels, the cost-to-benefit ratio remains extremely attractive. This affordability ensures that protection is accessible not just to high-income families but to almost everyone. Whole life or endowment policies, which include savings components, are naturally more expensive. These plans usually cost between $80 and $200 USD per month, depending on the coverage and duration. Although the monthly payments are higher, they provide long-term financial benefits by combining protection with cash accumulation. Many Germans view these policies as long-term commitments that support retirement planning, emergency funds, or generational wealth transfer. Premium rates are kept stable and fair due to Germany's strict regulations and competitive insurance market. Insurers must justify pricing based on actuarial science and consumer protection laws, ensuring that customers are not overcharged. As a result, Germans enjoy access to reliable, transparent insurance products at predictable prices. The affordability of insurance, paired with Germany's disciplined personal finance culture, explains why coverage rates are high across the country. For Germans, life insurance is not a burden, it is a smart, low-cost investment in long-term security. Germany's approach to personal finance and life insurance provides valuable lessons for countries around the world. At the core of the German financial model is a mindset built on discipline, planning, and responsibility. Instead of chasing short-term gains or relying heavily on government support, Germans focus on creating long-term stability for themselves and their families. Their average income, nearly $55,000 USD per year, gives them a strong starting point. But it is the way they manage that income that truly sets them apart. One of the most important lessons is financial literacy. Germans are taught early in life to understand budgeting, saving, insurance, and long-term financial responsibility. This education translates into real behavior, saving consistently, investing cautiously, and protecting income through insurance. The high adoption of life insurance, both term and savings-based, demonstrates a recognition that financial protection is not optional but essential. Another powerful lesson is the balance between safety and growth. While Germans avoid high-risk investments, they are masters at building wealth slowly through stable financial products. Their endowment-based life insurance plans show how conservative financial tools can still generate meaningful long-term value. Germany's strong regulatory system is also worth noting. Transparency, consumer protection, and accountability ensure public trust in insurance companies and financial institutions. This trust encourages widespread participation and prevents financial exploitation. Finally, the German focus on responsibility sets a global example. Whether securing a mortgage worth $250,000 USD, planning for children's education, or protecting family income, Germans understand that financial planning is not just a personal choice, it is a duty. In a world where economic uncertainty is rising, Germany offers a model built on stability, education, discipline, and protection. These principles prove that true financial security is not created by luck but by consistent, informed, and responsible decisions. As we reach the end of this journey into Germany's world of personal finance and life insurance, one thing becomes absolutely clear. Financial security is not built on income alone. It is built on behavior, discipline, and a mindset that values protection as much as growth. In a country where the average citizen earns around $55,000 USD per year, people understand that safeguarding their income is a responsibility, not a choice. This is why insurance, structured savings, and long-term planning are deeply woven into the daily lives of German families. Through disciplined saving habits, affordable insurance coverage, and a strong regulatory foundation, Germans create layers of financial protection that last for decades. This approach teaches us an important lesson. Financial stability doesn't depend on being rich, it depends on being prepared. Whether it's a family protecting a $300,000 USD mortgage, parents securing their children's future, or an individual planning retirement through savings-linked insurance, the German model shows how consistent, thoughtful decisions can build lifelong security. Their financial system proves that even small monthly premiums of $2 to 40 United States dollars can prevent massive financial challenges in the future. The real message of this video is not just about Germany. It's about what every viewer can learn and apply in their own lives. No matter where you live, protecting your income, planning ahead, and choosing financial tools wisely can transform your future. If Germany, with its disciplined culture, strong economy, and smart financial habits, can demonstrate anything, it is that true financial strength comes from preparation. So, as you leave this video, ask yourself, how can I start protecting my income, securing my family, and building a stable future? The answer begins with one decision: planning today for a safer tomorrow. If this video helped you understand the importance of protection, make sure to like, subscribe, and share it with someone who might benefit from this information. And if you have questions or need guidance on any part of life insurance in the Germany or personal finance in general, drop them in the comments below. We're here to help you make smarter, safer, and more confident financial decisions.